It's very interesting to note that over the course of the last year, despite there being a significant trade war between the US and China, Alibaba's stock price has risen by over 88%. However, this positive momentum is really only seen throughout this year of 2025, because over the course of the last 5 years, this stock is still down by almost 40%. And that's not even from the all time highs. The all time highs were back in October of 2020 of around $310 per share. From that point till now, this stock has dropped by almost 50%. Of course, there are a number of different factors that have caused this massive drop in Alibaba's stock price. Remember, a few years back, there were the concerns around Alibaba being delisted from the New York Stock Exchange. We also saw the Chinese government crack down on big tech companies throughout the country. And finally, we saw the crumbling of the Chinese real estate market. But what we've seen in the course of the last year is a turnaround of their overall economy. But despite this, we still see a lot of negative sentiment around the country. And where this has most recently popped up is in headlines around China's Singles Day. Singles Day in China is the equivalent of Black Friday. And what a lot of headlines are alluding to is that consumers are still very weak throughout the country. The headline is that a lot of consumers are pulling back on what they're spending on, and they actually used Singles Day to load up on a lot of essential items. They're not spending on some of those items that are more like to have. However, if you look at the numbers, what you see is that in 2024, they saw a sales increase year over year on Singles Day of around 26%. That's across the Chinese economy in general. That's not just specific to Alibaba. And what we are seeing in 2025 is that sales increased by about 14%. So you see this decrease in sales, right? It's not increasing by that 20 plus percent mark. However, a 26% increase in sales in 2024, followed by a 14% increase in sales in 2025, is very reasonable and still a very fast rate of growth for sales around the country. To me, this is just showing that China is still working its way out of the weakness that they have seen in their economy. However, what we aren't seeing is a decrease in sales. We are still seeing numbers increase and increase at a very nice clip. So in my opinion, this is just this negative sentiment around China really showing through in how these headlines are presented. Because if you looked at this and you were trying to be bullish around the company, you would say sales increased by 14% year over year. That is a great number to see and great growth to see across the board. Obviously, if you are trying to be bearish against China and Alibaba, you would start diving into the numbers and nitpicking the fact that a lot of consumers are spending, quote unquote, on essentials instead of like to haves. So to me, this is really just analysts and people out there, again, having negative sentiment towards China. However, we will have to wait to see how these numbers actually reflect for Alibaba's earnings, because they will not be presented in their upcoming earnings announcement, which is expected on November 25th before the market opens in the US. And looking at estimates for this quarter can be a little bit deceiving. For EPS, analysts are expecting only 81 cents of earnings. That compares to a year ago when the company put up $2.12 of EPS. For top line numbers, analysts are expecting $34.19 billion of revenue. That would be an increase of about 3% from a year ago when they put up $33.25 billion. Let's start by diving into this revenue number because, again, it's a little bit deceiving. Revenue last quarter, if you exclude the sale of Sun Art and InTime, increased by 10%. So basically, last year, they sold a business. This was actually January of this year. They sold their Sun Art and InTime business. Sun Art sold for around $1.6 billion. And that made their revenue numbers for the course of this year look a little bit lower in terms of year over year growth. When you pull that sale and the revenue that they were bringing in from that business out of the numbers, you actually see that Alibaba last quarter grew by about 10% year over year. So I would expect that this quarter, again, if you pull out that Sun Art revenue, you'll actually see revenue growth probably between 8 to 12%. And this is really why we have seen Alibaba increase in 2025 in terms of their stock price. Because with this sale, if you exclude that revenue, you see a lot stronger numbers again in the last couple of quarters because you're talking about double-digit revenue growth. Again, if you look at these numbers, it's including the Sun Art revenue. So that's why you're only seeing this 3% growth year over year. But prior to that sale, the company was only growing their top line by single digits. So it's good to see in 2025 that they're getting back to this double digit growth. And I think that is going to continue into 2026. And this growth is starting to occur across the board for the company. Their largest segment is their China e-commerce branch. That grew by 10% in this last quarter. They also are seeing solid growth in international sales, which increased 19% this last quarter. However, the most exciting thing for investors is the cloud intelligence group. That saw revenue increase by 26% year over year. This is what investors are going to be paying the most attention to. Their AI sales specifically and revenue within this cloud intelligence group is increasing by triple digits. So we are seeing a lot of growth in this area for Alibaba. So in my opinion, I do think that top line numbers are going to be a lot more important for Alibaba in this upcoming earnings announcement. I think overall, that's what's really going to excite investors and set the company up well going into 2026. But again, in terms of the bottom line numbers, analysts are only expecting 81 cents of EPS. They have dropped their estimates significantly over the last 90 days. And what we could see is over the last 4 quarters, Alibaba has performed relatively well in terms of their bottom line numbers. So if I had to put up my own estimate, I would guess that Alibaba is going to put up numbers closer to $2 per share in this upcoming announcement. I do think towards the end of 2026, we are going to see a lot more importance put on Alibaba's bottom line numbers. But right now, heading into 2026, I do think top line numbers are where investors are primarily going to be focused. What I want to see at the end of 2026 personally is Alibaba getting back to all-time highs in terms of their EPS numbers. Back in 2020, they hit a high of $9.17 per share. Right now, they're trending back in that direction. And I think by the middle, if not end of 2026, we could see them get above this mark and maybe even above the $10 mark. And if we see these two things start working together very well in 2026, and by two things, I'm talking about very strong top line growth as well as strong bottom line growth, that's where valuation will have to start catching up for this company. Right now, according to Yahoo Finance, the company is trading at a forward P ratio of a 23.75. However, this is not completely accurate. If you look at the numbers that analysts are expecting for fiscal year 27 or really calendar year 26, they have a low EPS estimate of $7.60. The inline or average EPS estimate is $9.73. And the outperform number is $13.52. That would put the PE ratio anywhere between a 21 and a 12. And what that means for growth is we could see very significant growth numbers for this company. The inline estimate is growth of the bottom line of over 35%. At these rates of growth, we should see much higher valuations for this company. I would not be surprised at all if we see Alibaba trading at a 25 forward P ratio if the company is able to grow their bottom line by 35%. At that point, the stock should be trading around $240 per share. On the high end, if Alibaba somehow comes through and they put up $13.50 of EPS, that is almost 90% growth for their bottom line year over year. At that point, the stock should be trading closer to a 30 forward PE ratio. That is massive bottom line growth. And if they are growing that quickly, you know their top line is growing probably by 10 to 15% on the low end, potentially up to 20% top line growth. And if we see those numbers come to fruition, we could be talking about a stock price of over $400 per share. Personally, I like being a little bit more on the conservative side. I think Alibaba should at least trade at a 20 forward valuation. I think they're going to get close to $10 per share in 2026. And what we could see the stock price go up to is around $200 per share by this time next year. But again, that is all just my opinion. And keep in mind, I do own shares of Alibaba in a couple of my portfolios. This is the YouTube portfolio, and right now it is sitting at a value of almost $85,000. And overall, today was a very rough day in the market. The only positions that we had in the green were Alibaba and Abercrombie and Finch. We have a small Alibaba position of only 15 shares. Right now, we're up 107% on this position. But again, that isn't a massive gain just because it's a relatively small position for the portfolio. However, if we do look at some of these other positions, we can see that our biggest losers today were SoFi down around 11%, Oscar down 7%, Zeta down 9%. I am looking forward to adding even more Oscar to my position. Right now, I have 400 shares. In my opinion, this is a company that in 2026 could be trading at $30 per share. That would be a double up from the current stock price. I love this company right now, and I think they have a lot of potential moving forward. So I look forward to continuing to build out this position if the stock continues dropping lower. I certainly think that Alibaba is still at a good spot. If you haven't built out a position, I think you could purchase shares here, and over the course of the next 1 to 2 years, you are going to be in a very nice spot. But that, again, is just my opinion. Make sure you do your own research. I also think that there are other positions that have better risk reward profiles, like Oscar, I think is a good one. Also, Novo Nordisk, I've been very bullish on. But I also think that a big thing to keep in mind is making sure your portfolio is balanced. Right now, Alibaba, I have built out my position over the course of really 2022, 2023, and 2024. So for me, I am very comfortable with where my position is at. I don't want to add more because right now it's already a large weighting in the portfolio, in my larger portfolio, my personal portfolio. In the YouTube portfolio, you can see that it's a smaller position that I have. That is more to make sure that I'm transparent with you guys because I want to make sure that I own in the YouTube portfolio stocks that I hold across all of my portfolios. The only position that I hold outside of the YouTube portfolio that is a major position that I don't hold in specifically in the YouTube portfolio is Meta. Meta is a very large position for me. And if we see Meta actually continue to drop, that would be one where I could add a few shares, again, just to make sure that I'm transparent with you guys on the positions and the companies that I hold in my portfolio. So with that, let me know down below, do you own any Alibaba or what stocks are you watching very closely right now in the market? There are a lot of deals out there. So let me know down below, and while you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.